good. All right, let's begin. I have a feeling we are going to have quite a few people. By my collection, we already are up to 20 or so. Giles, are you here by chance? Are you on? Maybe you're on, yeah, maybe you're not. I'll keep an eye out for you. Okay, let's begin. So first off, some introductory stuff. As always, I take the first minute just to do some introductions. Really exciting. We are close to 33,000 people in our group. I suspect we're going to pass 3,000 this month in September. And that's really a credit to every single one of us that makes the forum awesome. And I thank you very much. The other warning, and it is kind of a warning, is that anything that is said today is public. These go out on public channels. Our forum is private. These videos are public. So be advised of that at the outset, please. Anything you say will be distributed. Last, I would ask that unless you're asking for a question, please keep on mute. It's quite distracting as we kind of go through these things to have to figure out who it is that is making some noise, even if sometimes it's a background, and I then have to kind of interrupt and kind of go through. So let's begin. Let's go into professional corporations. And before, let me start with my little morning humor. This was on a truck. It's everything. Everyone should have this on their truck. I don't see any reason why someone doesn't have this on their truck. So get it on your truck. Okay, let's begin. Professional corporations. So congratulations, everyone. Realtors are seemingly entering into an area that a lot of other professions have been able to avail themselves of for several years. Professional corporations, with due credit to the provincial government. You know, everyone likes things and dislikes things about various governments, but I think uniformly people are pretty pleased with the recent decision of this government, and kudos to them for doing this, in allowing for professional corporations to exist for our profession as a matter of basic equity. It seems fair that we be allowed to plan our affairs as other professions do, as lawyers do, as dentists, doctors do. I'm not sure if accountants have professional corporations. I believe they do. But regardless, this really kind of aligns real estate as a profession with so many others. And that's really exciting. And it's exciting for the reasons we're going to discuss today. The first thing I'm going to point out is that a professional corporation, though it is a corporation, is not the same thing as a general corporation, a normal corporation that you're used to. When you start a business, a corporation is set up largely, yes, there's tax advantages, and we're going to talk about what those are today, and those exist in professional corporations. But the reason you're really doing it in large part is also for liability. You are looking to stem lawsuits as against your person, and professional corporations do not in any way absolve you of personal responsibility for your actions. So if you think that you can become an incompetent agent because you're able to do this, I know no one here is thinking that, but if you are being sued, you will still be sued personally. And this really should be no concern to you, because we have something really just as good as corporate veil. We have insurance. That's what professionals do. Fundamentally, when you sign your name and when you act, you are held to a code of ethics. You are held to account at law. You are held to the standard of a normal realtor. That does not change with professional corporations in any way, shape, or form. So really what a professional corporation is, if you want to think about it, is it doesn't have any of the liability shields, but it maintains all of the other virtues of a corporation, and specifically for the purposes of tax planning, which we will talk about. So let's talk, if you don't mind, about firstly the disadvantages of professional corporations. And the reason we're going to start there is because there really aren't that many. In fact, the disadvantages can kind of be thought of in three different categories. First, there's the setup cost. where you have between $1,500 and $2,000 to establish a professional corporation. Do not think that this is the same setup as a normal corporation. It's not much different, but the articles are slightly different, and you want to go to an accountant who is versed in this area. I do believe we're going to have, hopefully, an accountant join us today who is versed in this area as well. We'll see if he comes online. Next, you do have annual filing fees over and above the annual filing fees you pay. And those annual filing fees are corporate annual filing fees, and they will be between $1,200 and $1,500 a year. Sure, you can find them cheaper, but you know, A, you get what you pay for in this world, and B, the normal annual filing fees for a corporation are between about $1,200 and $1,500. And of course, you have the ongoing compliance. Whenever you take money out, you know, you have to file your T4s and your T5s, and all of that goes into the ongoing costs of a corporation. You'll note that these really are largely insignificant costs if you are a performing realtor. And actually, professional corporations are really designed around people who do huge volume in real estate. If you are generating $100,000 to $150,000 in commissions per year, not to knock that, good on you. I know that that's hard to do, but you're going to find that a professional corporation really isn't probably for you, because most people require, after tax, 150 whittles down to about 100, and most people require that type of money to live in Toronto or the GTA. And so you're not really using your corporation to hold money or do any of the things we're going to talk about. But if you're generating, you know, a healthy $500,000 or 650,000 or whatever it may be, then definitely these types of fees should largely be inconsequential. And frankly, the benefits, as you'll see, far outweigh those filing fees. Of course, the last thing you have to worry about is how many, if you do set up a professional corporation, how many of your colleagues and friends will ask you about that corporation, and how many hours, instead of actually searching MLS, you will be explaining to people how great your accountant is or how much you hate your accountant. It's really one of the two. No one is ever dispassionate about their service providers. All right. So let's deal with the reason you're here. Why in the world do we want a professional corporation? Why are we engaging in this in the first place? And the first upside is definitely the tax savings. There are three upsides we're going to talk about today. The first is the tax savings. So we're going to use, as an example, our realtor, Sanjeev. Sanjeev, nice-looking realtor, young, spry, doing well in life, has gross commission income of $650,000. I know you all know this, but I'm just going to stress gross is the actual revenue before you deduct expenses. That's what I mean by gross. And his 2020 expenses are $230,000. So those expenses include advertising, they include realtor fees, ongoing education, office setup, they may pay lease, whatever it may be. I mean, primarily when you're a realtor, if you have expenses of $230 on revenues of $650, that is probably a Google AdWords revenue or lead generation expense. But those are valid expenses, and that's the scenario we're going to go with. So what happened before professional corporations? I know you guys kind of, a lot of you don't know this. A lot of you basically take your, assemble all of your expenses, throw it over to your accountant and say, all right, tell me how much I owe. And you're really not to be blamed. It's kind of hard. And frankly, you're concentrating on making money in other areas. But for the purposes of today's discussion, and really this discussion will not be, sorry, there's someone who has to mute, guys. I'm sorry. I'm now going to just take a bit of time and figure out who that is. Okay. All right. So for the purposes of today's discussion, you really kind of have to understand how the tax system works, because what I intend to do as part of today is really delve into the numbers behind why professional corporations make some sense. And the first thing I'm going to mention is that in Sanjeev's case, what he effectively has, he has taxable revenue of his gross minus his expenses. So effectively, if we take 650 and we subtract 230 from that, then we get to an amount of $420,000. So he basically is taking home before tax $420,000. And the way it would work if he doesn't have a professional corporation is he would take that $420,000 and he would pay a graduated amount of tax. So on the first $44,000, he would pay 20%. And between this amount and this amount, he would pay 24%. And between this amount and this amount, he would pay 29%, and so on and so forth until 220,000. Remember, Sanjeev is making 420,000. And so he has $200,000 of revenue that comes in at the top rate of tax, which is approximately 54%. That's the way it works. And then what an accountant does is they add up all the various tax brackets, and they then say, here's how much in taxes you owe. Now, if you think about what this chart means, it means that anyone who approaches an accountant with net income before tax of over $220,000 has a bit of a shortcut. They are able to take, if I add up all of these particular numbers, if I add them up, every time it will come to $82,131 in tax. And then from there, right, because it's the same amount every time to get to 220, and it's the same amount. So if I were to do 20% times 44740, and then 24 plus 24% of the difference here, plus this of the difference here, so on and so forth, I would get $82,131.13. And then from there, it's just a function of saying, okay, how much in net revenue did you earn above 220? And let's tax that at 54%. Right? And that's a really good shortcut, particularly for understanding today, because I don't want to have to, for the purposes of math, go through every single step here. Every person we're going to be dealing with professional corporations is usually high net worth, and those high net worth, I'm going to assume for the purposes of discussion, have expenses. When expenses are deducted as against revenues, it comes to more than 220. Thus, everyone will pay $82,131.13, and then it's just a question of how much more than that they pay, which is 54% for every dollar above 220,000. I'm going to pause for a second. Does that make sense?
Yes.
Okay. Sorry, I lost the chat bubble. There we go. Okay, great. So, how would we calculate Sanjeev's income before a PC? Well, we would take 650, and that's our total income. And we would subtract the 230, and we get the 420. And then we apply the tax rate of 81,131. And then we take $200,000 at 54%, and that's 107,000. We add 107 and 81,000, and we find that on $420,000 worth of revenue, Sanjeev has to pay the CRA $189,191.13, which could explain why Sanjeev is so enraged every time a politician tells them that his taxes are going up. It's because look at how much taxes you actually pay in this country. We get a lot for them, but boy, you pay a lot. And those people who want more accountability for our tax dollar are not without.
Still serving breakfast?
Sorry, guys, I need
get the.
There's someone ordering breakfast.
Is it the power breakfast?
Well, we're gonna have to listen to his breakfast. It doesn't seem. Oh, it seems like I have a lot more than. I'm sorry.
With steak.
1 minute.
And please. Can you do the eggs poached or?
We're gonna wait for someone to order breakfast.
If you can't, then scrambled's fine.
Can't you mute everyone?
I'm trying hard, but my problem is that there's a lot of people on this, and I'm going to see if there's a way to mute everyone. Just 1 second. Where is it? Just give me a second, please.
Yeah, there's a single button to mute all.
Is there? I'm looking. Sorry, just give me 1 second, guys. We have this problem every time too, so it's about time that I learned this.
Mark, there's only one person who's not unmuted, actually.
Yeah, but my problem is, all right, let's move on, guys. I'm going to figure that out for next time so we stop having this problem. Though it's good to know that someone has breakfast. Anyways, so we bring the total due and owing to $189,191.13. And that's the way taxes work, or at least they did work until October, when we are expecting to finally have our PCs come in. Now let's talk about how it works if we were allowed to incorporate. So the first thing to note is that the corporation rate, and this is actually a critical component of why it is we use corporations to shelter tax. Corporations have a lower tax rate than individuals. So as we discussed, for every dollar you take in, you are above 220, you are paying 54%. But a corporation's tax rate, it's not graduated, it is 26.5%, which really, if you take a look at it, you know, it's really at the bottom rate of the marginal tax rate. So most people who earn any sort of income get benefit by actually only paying the corporate tax rate. And as a result, if Sanjeev earns $420,000, as he does here, then he's only paying $111,300 in taxes at the time that it's taken into the corporation. You will recall that Sanjeev, when he took it into his person, had to pay $189,000. But in this instance, he's able to pay only $111,000. And as a result, he's paid $69,891 less in taxes at this point than had he not had a corporation. So far, so good. Now, let me be clear. It's not advantageous to simply use a corporation and then take the money out. Because if you do, you will find that you pay a roughly equivalent amount of tax. So, to be clear, I don't want to go into what the dividend gross up is. I don't want to go into the dividend tax credits. It's way too advanced for what we're talking about today. You can trust me that I've done out the math of what it would take to dividend the money into the hands of the shareholder, that being yourselves. And if you take that out, then you will note that we have paid $111,300, but we then have to pay another tax, the dividend tax. We have to pay that as well. And if we add up the dividend tax of $85,819, forget about how that's done. It's way too complex. I don't want to get into it. But if we add up that tax in conjunction with the tax that was paid, you will find that what you end up paying in this instance is $199,199. So roughly, it's about $18,000 or $19,000 more than you would have paid in the event that you took this into your person. And the reason for that is because the government tries to make it roughly equal, whether or not you use a corporation or not. As you'll see, there's going to be examples where it's much more even, where it's off by just a couple of $1,000s. So the government's concept in doing what's called the dividend gross up and everything else, which is this step here, is to equalize, is to make it no more advantageous to use a corporation than to use yourself. So why, if that's the case, are people saying, oh God, personal corporations are the best? Well, it's because you have control of when it is you're going to take this dividend hit. And because of that, this amount, the $111,300 that you have paid, the differential, the extra $70,000, is almost like an RRSP. You can have that in a corporation for several years if you like, before you choose to withdraw it. And moreover, you can grow your money within the corporation in order to have more when you dividend out. Because obviously the government has not taken your 70,000 until you've authorized it. And so if you've generated 600,000 and your true expenses and needs in life are $200,000, hypothetically, then you can keep 400, after you pay your tax, you can keep approximately, when you pay 100,000 in tax on the corporate level, you can keep about $300,000 in your corporation, which you can use and grow within your corporation. And not until you take it out of your corporation do you then pay the equalization tax. That's not what it's called, but I'm calling it for the purposes of conception. The equalization tax that then brings you to the rate that you would have paid had you had it in your person. I'm going to pause for a minute. Does everyone understand that concept? Does everyone understand the advantage of the professional corporation in this regard?
Yes. Sure.
Yeah? Does anyone have any questions? Let me ask if anyone doesn't understand first. No? Okay, so far we're good. All right, let's keep moving on. Now, that's a normal corporation, but it turns out that it gets better. It gets better because you remember I said to you that the rate of corporate taxation was 26.5%? Well, it actually is much lower than that for you because there is something called a CCPC, a Canadian Controlled Private Corporation. And when you're a small business, Canadian Controlled Private Corporation, which every one of your professional corporations will be, and you have active income. So what I mean by that is not just sitting on rental income from an asset, or not just getting dividends from a share, but rather active income, stuff that you actively work for, like your commissions. When you have that, then you have a CCPC. And as a CCPC, the first $500,000 of money that you take into your corporation is actually taxed not 26%, but 13.5%. And so what does that mean? Well, let's take a look at what those numbers look like. The corporate tax rate is 13.5%. So we still have Sanjeev, who's now earning $420,000. And we're now multiplying that by 13.5%, meaning that all he needs to pay when he takes it into the corporation is $56,700. Not that big a tax hit. Now, don't get me wrong. When the money comes out of the corporation, because these are deemed to be non-eligible dividends, again, you don't need to understand these terms, the gross up is significantly less and the tax credit is significantly less, meaning that in English, he will still end up paying roughly the same amount of tax. So if he pays $56,700 in year one, and he takes all the money out of the corporation in year one, then he will have to pay a dividend tax of $134,566, which, if we add it up, is roughly equivalent to what it is he would have paid if he had this in his personal self from the get-go. Again, no advantage to using a corporation if he takes the money out right away. But if he doesn't take the money out every single year, and if he's able to put $500,000 or so into that corporation, then he's only paying $56,700 in tax. And he can use the money within his corporation, not to fund his personal life or anything else. He can use his money to grow his business and to do other things actively. We'll talk about some of the other things. Having paid less tax, and thus sheltering a larger portion of his cash for a greater period of time, such that when he dividends it out to himself, there's more cash and thus more profit on the money. So does everyone understand? And so again, realtors, when they form their PC, are forming CCPCs. And thus, this here, the general corporation was done just to show you how it works usually. But this is what they applicable to your circumstance. This is the math that underlies most of your corporations. Now, don't get me wrong. If you're doing $3 million in revenues per year or putting that into your corporation, then you will get 13.5% on the first $500,000. And then for the remainder of the $2.5 million that you're bringing in, you'll have to pay 26.5%. But it will still be entirely advantageous for you to do that, given the amount of money. And again, we have someone, guys, I need you to mute yourself because I'm having some trouble finding the mute key. It's very hard to do. There we go. It was Beth. All right. So that is the reason that most people are very excited about professional corporations, particularly individuals that earn a lot of money and can maintain money in the corporation. Now, there's a whole range of details that I have not dealt with here. I haven't told you that as your income is passive. So for instance, if you take money, invest through your corporation and say, I don't know, an asset, and that asset generates rent, meaning passive income, then you start losing the bonus up provisions up to $500,000. That starts dissipating as the income that you're including is no longer active. And there's all sorts of other things that I could mention that are details that you will have to go over with an accountant. But conceptually, because this is all new to us, I'd like to keep away from all of those details. I want to just talk about the general idea of why this is advantageous, and then you will be able to knowledgeably take this information to your accounting professional, and that accounting professional will in turn be able to guide you through how to do a proper setup. So the takeaway, the first takeaway from the professional corporation is while the tax payable using a corporation is roughly the same or even a little higher than taking it into your person, if you can keep money in the corporation, there's significant tax savings year over year. And this is particularly the case with SBCs, CCPCs that have even better taxes. That all makes sense?
Mm.
Anybody have any questions about the first advantage before I move on to the second?
I got a quick question, not directly related to the first advantage, but earlier you mentioned 100 to 150. We saw the math over 200. Another rule of thumb I've heard of is if you're saving more than you're earning, it still makes sense. Does that rule apply, or is that a myth?
No, that's exactly the whole point. So if you're saving not more than you're earning, more than you're spending. If you're saving more than you're spending, then yes, you should be saving it within the corporation, because again, the savings that you have will already start with a bigger pie. Because if you were to take it into your person, you would be paying tax at 54%. But if you're taking it into a corporation, you're paying tax at 13.5% until such time as you need that money personally in several years. And at that point, you would take it out, but it will be a much bigger pile because you will have invested that money in the meantime. Does that make sense?
For sure, yeah. So as long as you're saving more than 50%, if you're at 150 or 200, it would make sense for you.
It's not about a percentage, Dennis, because if you're saving 20%, but you're earning $10 million a year, it's worth it. It's about the aggregate amount that you are saving. If you are saving, say, more than 100, if you are able to put away in savings more through your efforts, more than $100,000 to $150,000 a year, then yes, a corporation's for you. Most people engage in professional corporations when they're able to save between 50 and 70. I generally find about 100 is usually, if you're able to put aside about 100, then a PC somewhat makes sense, especially if you're going to invest through that corporation.
Got it.
Yes? Okay, let's move on to point 2, because there are other advantages. Remember Sanjeev? Surely you guys remember Sanjeev. We were also so tied into his life. Well, it turns out that Sanjeev has been successful in love, and he has a spouse. He has a spouse named Vera. And Vera's income is $32,000 on eligible expenses of $2,000. Remember, when you get a salary, you don't get to expense very much. You know, like as a lawyer, I'm allowed to expense my robes if I belong to a firm. But you don't get to expense everything, which you get to do when you're an independent contractor. You get to expense everything except, this is the way the tax code works, as an independent contractor, you're allowed to expense everything except what is enumerated. And when you are a salaried employee, you only get to expense, nothing except what is enumerated. Anyways, that's for another day. So effectively, Sanjeev and Vera combined earn $682,000, and they have expenses of $232,000. So what that actually means is that they are earning collectively $450,000 before tax. Now, traditionally, what would have happened is Vera would have had to pay, pursuant to this, the following income tax on the graduated scale. Okay, she makes $32,000 a year, so she'd pay 20% on her money. But if you think about it, we have Sanjeev, who is paying a whole whack of money at this rate. And you have Vera, who has all of these different categories that she has not been able to use because she hasn't been able to earn enough. And as a result, if a professional corporation allows you to income split. Now, I want to be clear. The CRA has hugely cracked down on income splitting. You cannot do it merely because Vera earns $32,000. I'll show you how to income split in a second. But you can't just income split because it's advantageous. You can't use income splitting as a form of savings on tax or tax planning. Rather, Vera has to actively be involved in the business and be able to prove her worth. It's likely you'll get audited. Vera, but that's okay, particularly for realtors. Many spouses really are very active in their spouse's business. Many spouses are realtors themselves, spend countless hours supporting the other, spend marketing materials, go out on visits, and they may not actually have the same income as Sanjeev, who's been a very successful realtor. And as a result, Sanjeev can effectively pay Vera through his PC. And when he does, you'll see that there are tremendous benefits. Because if we were to take Sanjeev's income alone, we've already gone through, but he has to pay $189,131 if he just takes money into himself. But if he takes money into the corporation, then I've done some lazy math here. It's not exactly this, but I'm doing this for concept, because if you're bringing it into the corporation, you first have to pay the corporate tax, and then you have to pay the dividend tax. And I've made an assumption for the purposes of this discussion that we're just actively splitting without the corporation's differential tax hit. So it's going to be off by a couple of bucks, but I'm doing this for illustrative purposes. If we were able to theoretically split Sanjeev and Vera's income as between them, and let's just say that we made it an exactly equal split, so that Sanjeev was able to show that Vera had actually done $190,000 worth of work, meaning that Vera's actual income, and paid her $190,000 for that work, so that Vera now earns $220,000 in total, and Sanjeev goes ahead and earns actually $230,000 in this example, and Sanjeev himself earns $230,000. So it's exactly split based on their income. Well, in that instance, then there's going to be a significant savings in tax, because remember, Vera, it's not just that the combined couple has to pay $189,000. They have to pay $189,131 plus 20% on what Vera earns, $30,000, right? She's in this tax bracket. I haven't included that in the 181. But combined, Sanjeev and Vera, if they both avail themselves of all of the various tax brackets, only pay a combined amount of $169,000. Again, Vera truly has to be able to work for the professional corporation. Do not set this up without speaking to an accountant. Make sure it's kosher. There's all sorts of rules. There's all sorts of details. But professional corporations can be used to income split in this way. And that's incredibly valuable, particularly for those of you whose spouses are actively involved in your business. it is the case that many of my friends who are dentists or doctors employ their parents as bookkeepers, or employ their cousins or their brother as, you know, whatever it is. As long as they are providing true services, then you can lower your tax rate and give it to someone who may be able to better use it because they are in a lower tax bracket. Huge, huge savings. And you'll note that income splitting is advantageous even if you take money out of the corporation in year one. It has nothing to do with holding the money in the corporation. It has to do rather with allowing for better taxation planning, allowing the marginal tax rates to better be applied because you're bringing more people into the picture who may have more availability in the lower tax rungs. Pause. Does anyone have any questions? Is that clear so far?
I have just a quick question. Is it for spouses married or common law as well?
Doesn't matter. This has nothing to do with married spouses or even spouses at all. It can be anyone who you work with that you can do this with. But because spouses are generally financial units, that is to say, most spouses share money equally after going through the tax person, using a spouse is the same thing as kind of using yourself. So that's really a matter of getting money back to you in a more tax advantageous way. Whereas if you pay this to your brother or your sister, your adult, to your married brother or sister, it doesn't end up in your bank account. If you're looking at it as a tax planning strategy, using your spouse can have it revert back to your personal joint bank account, which is where the original money would have gone in the first place, but there will be more of it. Does that make sense, Tanya?
Yes, that was excellent. Thank you.
Okay. Any other questions so far before I move on to, Wow, we have a lot of people on. I'm just wondering, Giles, are you on by chance? No, I guess he couldn't join today. Okay. All right, let's go on to the third upside. And that is exemption. You're all realtors, and you are all aware that there is this one great freebie that we all get in life, and that's our principal residence. When you sell your principal residence, if it's an income property, you have to pay capital gains. But if it's where you keep your underwear, where you live, you don't need to pay capital gains. It's free of capital gains. Well, there's another advantageous capital gains free advantage that you get. And it's one that everyone should be trying to use up as quickly as possible before the government one day takes it away. I can assure you, if the government ever took away the principal residence exemption, I know that there's Facebook posts that say they're going to do that. That's all fictitious. That's not happening. That's just people who don't like various political parties. There's never been a political party who would survive if they were to go ahead and do that, and no one, current governments included, are even proposing it. Having said that, governments routinely decide whether or not to continue to extend this exemption because most people don't even know they have it. In a lifetime, if you own a Canadian-controlled private corporation, a CCPC, we talked about what that is, right? Like a realtor corporation, producing active business, and if you hold those shares for 2 years or more, then when you sell those shares to someone else, it is exempt from capital gains. What does that mean? Well, let's be very honest. I'm going to say something that's going to offend several of you right now. And I don't mean it to be offensive. I mean it actually to be instructive, because this may actually make you money in the long run. So rather than getting your backs up to what I'm about to say, please do not. Instead, think about this dynamically, because you might be able to make more money in life if you internalize what it is I'm saying, given this lifetime capital gains exemption. I know every single one of you believes that you are business people. You are not. You are not. You are professionals. And there is a world of difference between business people and professionals, a world of difference. This is not in any way to know, listen, I'm a professional. I'm not trying to knock myself either. It takes drive. It takes talent. It takes incredible work to do what you guys do successfully. So I'm in no way demeaning the work, but you aren't business people. Business people are people who have massive, massive expenses and who are sitting there trying to figure out how to do payroll on a daily basis and who are putting up with HR problems and the like. What we are professionals. The province of Ontario has carved a monopoly out where we alone are able to provide services. And we are able to avail ourselves of community-wide technologies to go ahead and provide those services. And while that is incredibly advantageous and means that many of us are able to set up far easier than we can for a business, it also means that we are far more easily commoditized. And the only thing that we have going for us is our personal service. What does that mean practically? That means that when Mark Morris stops running MJM Legal, which is my firm, people stop coming. This is not true, by the way, of Canadian Tire. Hell, during your lifetime, there's been 6 changes of CEO at Canadian Tire. You haven't known it at all. You still go and shop there because that's a business. But a profession is something that is very closely aligned with the professional service that is provided by individuals. And here's the kicker. If you want to sell your business at the end of the day, which is really the advantage of the lifetime capital gains exemption, then you must structure a business that is bigger than yourself. I have no intention of selling MJM Legal, but my last firm I did have an intention of selling. And that's why I didn't call it after my own initials. I didn't call it MJM Legal, I called it Access Law. And I worked on developing massive amounts of systems and technologies such that other people could take it over. And when they took it over, people didn't say, "Where's Mark?" They said, "Oh yeah, Access Law and the Walmarts and the Loblaws. Yeah, I know them. Yeah, go there for a will." And so there was value that was enduring beyond myself. And as a result, the shares that I held of Access Law, I was able to sell for value when I left. And thus, I was able to partake in the lifetime capital gains exemption. I'm not trying to say this to brag. I'm saying this because if you want to avail yourself of this third upside of the lifetime capital gains exemption, then you as realtors, as you set up in October, should be thinking wildly, broadly, and expansively about the value you are providing beyond just yourself. Because it is only when you can provide enduring value within a corporation that that corporation starts having worth to others and where they will pay you for those shares. And thus where you can avail yourself of the $850,000 lifetime capital gains exemption. And it's only once in a lifetime. And so you want to use it as quickly as possible. And if you are able to actually form a PC as a professional, cognizant of the idea that you're trying to build this professional corporation to be something more than yourself, you may have success. Some people will. And those people can then avail themselves of that third upside. If you sell, conversely, as Sanjeev, just a client list, which is pretty much what it is that Sanjeev has when he retires, then any money that he makes on that is taxed anyways as a capital gain in the normal course. And there is no lifetime exemption. So that's the third upside. I'm going to put this up. Giles Osborne was supposed to join us today, but he's someone who specializes in these areas. He did help me with 1 or 2 things on this presentation as well, so I do want to give him some credit. Or at least he read over my presentation, so I appreciate that. And he verified that my numbers are accurate, so that was great. And of course, this is my contact. And that's it, guys. We're about to enter into something that is hugely advantageous and that will up people's take-home pay. I hope you use it responsibly. I hope you deal with professionals that know what they are doing. Don't go to your accountant. Go to an accountant who knows how to do professional corporations, and like everything else, if you use the right professionals, you will be far better off long term. So we have 10 minutes left. I'm going to open this up to questions, and I'm happy to take any of them. And the one last thing I would mention is there are many, many, many details that I have left out in this broad-based overview. You are not an expert by having heard this lecture, but hopefully this session has kind of shown you through math what the advantages are of maintaining a professional corporation, and will encourage those people who are in the upper income brackets of our industry to consider it, to engage in it, and to continue in this amazing, amazing profession that we've all chosen, which we all love, and which is now going to become even more profitable for us. So, what can I answer? October 1st. I don't know if it's October 1st. I've only heard October. I'm not sure when the actual date is, Riley. So it could be any time. But October is the date that I understand the government is heading for. And believe me, you can incorporate in advance of that. You just don't operate. You can go ahead and, well, actually no, you probably can't. You can't incorporate. No, you'd have to wait until the start date. But you can go to an accountant. You can get everything ready. You can give instructions and everything else, and get prepped for day one if you wanted to. No problem.
Hey, Mark, I'm just going to chime in instead of texting. First of all, sorry about earlier, my mistake, leaving the microphone on. I wanted to ask you, so right now, let's say, you're an agent, it's fall market, you're having a good September, you have a lot of pending closings. We do a lot of pre-construction, so we have a lot of future installments closing regardless. If you incorporate in October, have trades that have been signed under your personal name prior to the date at which we're able to do this, be able to be paid out to the corporation directly, or is that something we still don't have the verbiage on when it comes to the legislation?
Okay, I'm going to give you my best guess, subject to change, but the question is this. All right, we've been realtors for years. We have a whole bunch of ongoing income. How do we put those existing files in the corporation? In tax, there is something called a rollover. As a matter of course, as a matter of corporate course, flipping assets, flipping deals, flipping existing businesses into a personal corporation is usually allowed by virtue of the Tax Act. I think it's section 67 or 69 of the Income Tax Act allows for rollovers into personal corporations. That is usually permitted. Assets, of which your contracts would be one, is usually allowed to be flipped. You'd have to speak to your accountant. Having said that, you cannot roll out. So it works one way only. You can roll into a corporation your assets, usually without problem. And I suspect that will be the case for your existing and particularly new build deals, but you'll have to speak to an accountant to get a surety. I'm not taking responsibility for that statement. I may be wrong. But one thing is certain, once they're in that corporation, you cannot flip them back to your person without tax consequence.
Understood, and I believe we were speaking with, I'm sure Ryan was on this video as well. It would make sense that deals would continue to be done under our personal names for the sake of compliance, RICO, REBA, etc.
I don't know how it's going to be done, actually. I'm not sure if it's done under your PC or if it's done. Generally, when I sign something, I sign under a PC and I have no idea how that's going to work. And frankly, that's largely inconsequential. One day, someone will wake up and say, sign in the name of your PC or sign in your personal self. And at that point, great, we'll just do it. And that's not what I'm here to talk about. I really don't know how the signing is going to take place or anything else. I'm here really to talk about the tangible benefits regardless of how it's signed.
Thank you, Mark. Appreciate it.
No problem. All right. Oh, look, Lang just put up the proposed regulations for the personal corporations. Lang, when I post this video, if you can put that link on as well, I would really appreciate it. Roger. Good. All right. Any other questions for me, guys? Was this useful? Did you get anything out of this? Like, was this what you were looking for, or is there any particular aspect that I missed? Okay, good. I'm reading the chats. It seems like we are golden. So guys, we had a lot of people attend today. That was fabulous. And if you have any questions as you kind of go through this, always available, as always. And I want to thank every single one of you for being an active member of our group. Our group is awesome, and it's made awesome by people who contribute, like yourself, who come out to these events. And I, for one, am incredibly grateful for all of your support as we kind of build out this community. I speak on behalf of myself, Lang, and Sandra, who are moderators of this and put in quite a few hours. I should recognize Sandra and Lang's contribution, and they put in quite a few hours to keeping our feed clean and making this a valuable community for all. I will wish everyone a great day. We will post this video in a couple of hours. And thank you very much for coming.